Good afternoon and welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, what a solid Monday rally has been playing out on the Wall Street, notwithstanding the fact that we had super cues coming in from global markets as well. The Dow staged a very good recovery on Friday. We saw a 1200-point rally coming through on the Dow, and the S&P 500 and Nasdaq also staged good comebacks of somewhere around 2% or thereabouts. If you look at the Asian markets, over 4% rally coming in on each of the two indices, the Nikkei and Kospi. Of course, landslide victory for Sane Takeichi, the Japanese Prime Minister. That's also something that lifted sentiment across Asian markets, which is why we saw a very, very strong rally coming through on some of these Asian indices as well. European markets as well holding firm. But let's talk about our markets. We started the day on a very, very strong footing. And since then, we've had a steady day of trade. In fact, 25,922, that's the swing high that we made today. Didn't really manage to clock in that 26,000 mark, but I'm sure we won't be complaining because it has been a good steady day of trade, and more so for the broader end of the markets. If you look at the Nifty Mid-Cap Index, 1.5% gains. In fact, a near 1,000-point rally on the Nifty Mid-Cap Index. Small caps as well, upbeat, 2.5% uptick on the Nifty Small Cap Index. So yes, the texture of the market looking extremely strong. Last week was a fairly volatile one. We had the budget, we had the US trade deal coming through. Then we again saw some bit of volatility kicking in, but good start to the week. Let's hope that we can build on to these gains, and in fact, we could clock in that 26,000 mark, and post that, who knows, we could be knocking at the life highs as well, given the fact that we are just about or under 2% away from record highs on the Nifty. But let's talk about some of the pockets that are doing well. Of course, PSU banks, it's SBI that's leading from the front. A near 8% kind of a rally on the country's largest lender, SBI. Haven't really seen such a day for some of these stocks in recent times. At least I don't remember seeing an 8% rally on SBI in a very, very long time. So yes, SBI has fired up the entire PSU banking lot. In fact, talking about SBI in particular, it has topped that 10 lakh crore rupee market cap milestone today, ahead of ICICI Bank. 10.4 lakh crores, that was the market cap that SBI was at, and for ICICI Bank, it's just a little over 10 lakh crore rupees. So it has surpassed ICICI Bank in terms of market capitalization as well. Breadth of the market extremely strong. NSE advance decline ratio was at 4:1. 2,400 advances to 595 declines. Solid breadth portfolios would be dazzling today, and some respite. Given the fact that some stocks have shaved off 30 to 40% from record highs when it comes to the broader end of the markets, the mid-cap universe and small-cap universe. So those investors will be particularly happy with how their portfolios may be shaping up today. In terms of the individual movers, SBI, we were talking about that. Shriram Finance, Grasim reports numbers tomorrow. Ahead of that, the stock is upbeat. Dr. Reddy's, Tata Steel, by the way, reported a good set of numbers, at least on the India business front. Brokerages have kept their faith. They have buy rating on the stock, and the stock was up somewhere around 5%, hitting a fresh 52-week high in today's session. On the flip side, Max Health, Power Grid, ONGC, some of the consumption names like ITC and Nestle were out of favor. But ICICI Bank and HDFC Bank, these two were also out of favor, notwithstanding the 500-point rally that we are seeing on the Nifty Bank Index as well. But these two stocks are sitting out. So all in all, that was the texture of the market, and we'll take stock of the mid-cap movers in just a bit. But let me introduce on the show our guest this afternoon, Vikas Gupta, CEO and Chief Investment Strategist at OmniScience Capital. Vikas, lovely chatting with you. Last I think we spoke, it was before the budget sometime. But a lot has changed, not just the budget, even the India-US trade deal has come through. I think last time we were talking about 3-4 months to go and 1 year to go, but just came by within a couple of days from the budget itself. We've had all these events out of the way now. Good rally coming through today. What's your sense? Where are we headed? Do you think, just under 2% away from all-time highs? Do you think we are, going to hit that level this week itself and post that? How does it look like for the market?
Yeah, I mean, all the negativities seem to be moving out now. And the biggest overhang was the US-India trade deal. So while that is still evolving to the final trade agreement, but overall the broad framework is out. The kind of whatever it is, the negativity sentiment is now out of the picture. And if you see the fundamentals, they were already very good for India. With the Q3 data, it's even better. And now that the negativity is out, now the fundamentals and the valuations should start taking off.
Okay, of course, fundamentals were anyway looking good for India, and now with the India-US trade deal through, and we've got the details as well over the weekend. So the bulls are clearly charged up post that. But let's talk about the foreign investor community, right? We did see buying coming through post the trade deal announcement, but post that, a couple of days later, we saw once again FII turning sellers. Friday again we saw them as buyers. Just a data point for you, the domestic investors have overtaken foreign investors in Nifty 50 ownership for the first time. What's your sense with this intermittent buying coming in? Would you say that FII flows will remain volatile, or do you think now that the details are also out, would you expect them to come back in a big way? What's your sense?
So, yeah, so see, three, four drivers of FII flows, right? One is the carry trade. The Japanese carry trade, it's still going on probably. Some people are still trying to get out of that, right? That is one thing. Second will be what Warsh is going to do with the Fed, and that speculation will start coming in now. Then the third is, what are the alternative markets? And earlier there were Taiwan, Korea, etc., being an AI play, and that took off at a fairly higher growth compared to India probably, but very tech focused and cheaper valuations. Now all that is done, and rather people are trying to probably hedge their AI bets. And in that sense, India becomes a very attractive market, which has a high growth, but not AI driven high growth, right? So different sectors coming in to support the high growth, much more broad based and reasonable valuations.
Sure. You alluded to all the other markets in terms of AI plays, and India, of course, lacking a pure play AI story. But given the kind of crash we saw across the global tech landscape, the Anthropic-led crash, or the SaaS apocalypse, as you may call it, how do you see Indian IT in light of that? Do you see this emerging as a real threat? Or are these just knee-jerk reactions? Because let's not forget, in the past as well, we've had obituaries written for the Indian IT sector, but in the end, the IT sector navigated all those headwinds pretty well. Do you think this time around it will be something different?
Yeah, so even the SaaS apocalypse is overdone, probably, right? I mean, definitely there is a threat to the SaaS companies, but that doesn't mean, I mean, for the SaaS companies, they can use AI to actually get back in. The nature of the revenues and the business model will change. Now, same way now coming to the IT services, the traditional, man and material hours model is obviously going out, and the large scale growth with just hiring more team members, that's not going to work. But it's not that AI is going to do on its own. Nobody can just send the data to the cloud and say, okay, do my AI. There's nobody who can do that. It still needs a team, and people don't have those teams.
Yeah.
The Indian IT companies have those teams. So the change is that the same number of team members from an Indian IT company can now do much larger projects. And I mean, this year itself is $600 billion between the top three cloud pairs, right? In the chips. Now, and they're going to continue doing that. Our estimate is somewhere between 2.5 trillion is going to be invested by the big cloud players in AI investments over the next 3-4 years. Now, given that they need to make money out of the Fortune 500s or the Global 2000s, and the companies which will help them make it happen are the Indian IT services companies who will provide the services to the Fortune 500 to migrate their data onto the cloud, to build models on that and then deliver them value added insights. And all of that, now the question only remains that do they require so many team members which we're currently doing? And no, it doesn't require, but then the same team can do much more. So I don't see IT services going out of business or being required much less.
Sure. You've also seen the earnings, right, from IT services companies, from the large cap ones and mid cap ones as well. So, what would be the preference now?
Yeah, see, growth is definitely difficult right now for the large caps for a year and a half. We've been saying that until the AI demand kicks in, the growth is not going to happen for the large caps. The problem is whether large caps or small caps or mid caps all are fairly or slightly overvalued in our analysis, given the kind of growth rates, and that is why we're not too excited about IT from valuation perspective. From a long-term opportunity perspective, we think IT absolutely is there, but in the near term, the growth is not clear.
Okay. So, would the advice be to wait it out when it comes to IT services?
Yeah, absolutely. I would keep watching it very closely, but we would not jump into it at these valuations. Assuming you want
Sure. Okay.
market
Not the
beating
time to jump into.
returns.
All right. Okay. Got your point. If you want market beating returns, IT services not the place to be right now. But let's talk about one place where everyone wants to be right now, and that's PSU banks. The big elephant, so to say, started dancing once again. SBI hitting record high today, 10 lakh crore rupee market cap, overtaking the likes of ICICI Bank. Numbers have been fairly good. And that's the same case with some of the mid cap names as well, right, within the PSU banking lot. So, would you stick to PSU banks? And in terms of the kind of rally they've already seen, does it still make it a cheaper bet versus private sector names? And would you prefer that?
See, we have been optimistic and overweight on PSU banks and overall banks, including private banks, for more than a year and a half now, probably 2 years, closer to 2 years. So, we are really happy with what's happening today. Finally, the unlocking seems to be on the way. Okay. So, we have been holding on to this point, and we've come out with a lot of research reports on that over next 3 to 5 years, the banks should see, especially PSU banks should see near double digit, 13, 14% kind of growth rate on the assets, and which will translate into the same thing for revenues, but probably even higher growth rates for the earnings, because there's a lot of underutilized capacity with the CRAR ratios, etc., being where they are. So we think it's just a beginning, and banks are the largest sector by weight in Nifty, right? 35%, and it should be even higher as you see the valuations unlocking. And this is not some 1 quarter, 2 quarter thing. We think this is going to last for a year or two at least. That's our view in terms of even the unlocking happening. So we would definitely be super excited about PSU banks, as well as we'll not throw out the private banks. I mean, there is opportunity in private banks as well.
Okay, and what about the NBFC space? Because for Bajaj Finance, at least the numbers were a little overwhelming, underwhelming. I beg your pardon. From the NBFC space, would you prefer anything right now?
If in the NBFC, we like the infrastructure NBFCs. I mean, the merger was also announced in the budget, right? So those kind of NBFCs which ride on the capex from the government, that's the kind of NBFCs we like. Consumer finance NBFCs are also fine, even though there might have been a hiccup or so. But the valuations are not so comfortable in that space as compared to the infrastructure NBFCs, which are single-digit Ps.
Right. Okay, got your point. Infrastructure NBFCs, that's the preference within the NBFC basket. I also want to touch upon the power financiers, right? The board of PFC, it has given in principle approval for the merger between REC and PFC that was announced in the budget as well. So, do you see a case for re-rating post merger? Better pricing, better pricing power, so to say, post merger, elimination of the holdco discount, all these factors, could it drive a re-rating? Of course, the size of loan book would also increase quite significantly. And if you look at some of these power names, etc., they haven't really given any kind of exciting returns over the last 1 year or so. So, in that sense, post this merger, does it make a compelling case to look at PFC?
See, the merger is bringing them into focus. So it's just being brought into the limelight. The growth is there. If you see, actually, the growth is near double digit. Book size is extremely large. These are top rated, AAA rated domestically, and even internationally, their rating is limited. The bond rating of these companies is limited by the sovereign rating. Otherwise, it would be even higher. Okay. So these are extremely high quality companies, and with the kind of power we need for the economic growth and now all this manufacturing and trade deals happening, the demand for power and demand for power finance is going to be really large. And we are talking about nuclear deal and so on and so forth. So all kinds of clean technologies which will be financed by these, they have an edge there. The merger doesn't give any benefit in terms of they already have all those benefits, in terms of being able to lend at a very competitive rates compared to banks, etc. So they are highly competitive, they are highly efficient. NPAs are low. It's just that they're not in the limelight. And like you mentioned, like for REC, there would be a holding company discount but PFC
Yeah.
was anyway directly held. So both are single digit Ps, high growth rate. It's just that it will be brought into the limelight and the size makes it into the large caps, right? Automatically. And probably into the Nifty 50 very quickly. And then,
Yes.
all the institutional flows will start happening.
Okay, okay, got your point. A couple of more questions then. Of course, the India-US trade deal, we've already touched upon it at the start of our conversation. But some of the sectors that are in focus, all those export-oriented, pockets like chemicals, textiles, aquaculture, shrimp. Would you look at any of these stocks now, given the fact that they have already seen quite a bit of a run-up, at least post the EU deal? Does it make sense to get into any of these after the kind of up move they've already seen? Do you think there is a fresh leg of up move
Yeah,
waiting to unfold here as well?
Yeah, that could happen. I mean, see, the speculative up move could happen, but from a fundamental point of view, we would wait it out and watch what is the real impact on the growth, etc. So the opportunity is large, but how much they are able to grab and which companies and at what pace they will grow in the next few quarters, we would like to watch. And then, because at the current valuations, it's not very comfortable to speculate that growth will be very high and let me pay up and buy this. You know, we are not in that camp.
Sure. Okay. Valuation wise, not very comfortable with all these names that have already seen quite a bit of a run up. But last question, really, because
Right.
in terms of sectors, now that we have seen all these events unfolding, what would be the top three themes that one should look at, from a 1 to 2 year perspective? Give us your pecking order.
Yeah, so what we already discussed, one is the PSU banks. That's, I think it's just a mind-boggling opportunity. Very rarely these kind of things happen. Every market cycle, you get one such opportunity. On the previous market cycle, it was IT and defense and railways. This time it is PSU banks. Private banks is the second one. Third is housing finance. Fourth is infrastructure, NBFCs. All seem to be from the same sector, BFSI, right? And then there is the infrastructure companies. So
Yeah.
companies are, the power sector and roads and railways. So this is our pecking order.
Sure. And where does it leave you on consumption, Vikas? Because we saw the whole demand booster coming through with GST cuts outside the budget, of course. That was last year, but in the budget there was no concrete, announcements related to consumption. So where does that leave you on consumption for the next couple of years?
No, consumption is going to be very strong. My only problem is the consumption related stocks are extremely, to us, they look extremely overvalued for last several years. And even now, we are not able to allocate to them at these valuations. On a fundamental perspective, I think the consumption is quite good. Uh, our play would be through the banks, frankly. Okay. And if at all, maybe a little bit of
Okay,
consumer
sure.
finance, NBFCs. But through the banks, through the housing finance companies is how we would play consumption.
Okay, play consumption through the banks. That's the call. But with that, Vikas, completely out of time. Thanks a lot for taking out time. Always a pleasure chatting. Have a good rest of the day, and I wish to interact once again pretty soon.
Great to be here and great day for the market. So congrats to everyone.
Thank you, and same to you as well. Thank you. Well, that was Vikas with his top recommendations in terms of sectors and, of course, his thesis on the markets, IT banks. He was extremely bullish on the PSU banking lot at the current juncture. But let's take stock of some of the mid-cap movers and losers in the market before we bring on board our techie for today. Shipping Corp, after numbers, 20% uptick. The stock has been rising steadily today, and right now it's at the high point of the day, 20% up. Kalyan Jewellers, sparkling quarter, and that's reflecting in the stock prices as well, 15% up on Kalyan Jewellers. Transformers and Rectifiers, another one up almost 14%. Philip Carbon Black, that stock is up somewhere around 10%. BEML, Deepak Fertilizers, Elecon Engineering, Aditya Birla, Fashion. Lot of these mid-cap names are having a field day today, and no surprises given the fact that all the traction is in the mid-cap and small-cap indices or end of the market at the current juncture. On the flip side, what's not doing well, have a Concord Biotech, that's down 5%. Kaplan Point, REC as well. We were discussing REC with Vikas as well, and not very enthused. Over the weekend, of course, we had the in principle approval from PFC board for the merger of PFC and REC. REC is not really reacting very positively to that particular news. Max Healthcare down 3%. Sarda Energy, IDBI Bank as well. A couple of bids received in the disinvestment process, but Kotak Mahindra Bank has bowed out and has not placed a bid for the IDBI Bank stake. Five-Star Business Finance is also down. Page Industries, that's also down somewhere around 2% or so. I think it reported a muted set of numbers. And some of the brokerages still had sell call. In fact, I think I was reading a note by Citi in the morning, and they had a sell call on a Page Industry. So that stock is down 2%. But all these stocks are down anywhere between 2 to 5%. So the extent of the fall is not that much today in the broader end of the markets, and that's something which is heartening, really, when it comes to mid caps. But on that note, let's see whether we have our technical guest joining in at the current juncture or not. Rajesh Bhosale, Senior Technical and Derivative Analyst at Angel One. Rajesh, lovely chatting with you. Great Monday. We saw the Nifty clocking in a triple-digit up move, short of 26,000. But what's your sense? Do you think tomorrow, perhaps at the max day after, we would be able to reclaim 26,000?
Yeah, hi, afternoon, and thank you for having me on your show. Since last Tuesday, we are seeing a change in sentiments. I mean, since the strong bullish gap, the sentiments have totally changed, and we are now in a buy on dip kind of market. If we see last week, Nifty ended up with a strong bullish engulfing pattern, and it ended up above all the key moving averages. And today, again, we are seeing a bullish gap. And looking at the direction of the gap, definitely the trend is a positive. Coming back to a question of 26,000, we expect that to be retested tomorrow on the weekly expiry day. So 26,000, 26,100 is what we are having as a target for tomorrow. On the downside, the bullish gap left today around 25,700 is the key support, immediate support. Any dip towards it should be considered as a buying opportunity.
Any dip should be considered as a buying opportunity, but of course the setup looks positive on the charts. But would you say that the setup on the bank Nifty is looking even better compared to a Nifty, because seeing a good 560 point kind of an up move on the Nifty bank index, but you have counters like ICICI Bank and HDFC Bank really sitting out. Star of the day, hands down, SBI, 8% up move on an intraday basis, 10 lakh crore market cap as well, overtaken ICICI Bank. What's the positioning on the entire banking universe, and any favorites there?
Yeah, so definitely banking space, we are liking it, and definitely it's one of the outperformers. But uh, on the index front, we are seeing choppy moves. The highs that are seen are very small. So again, there we'll have a buy on dip, but focus would be on the stock specific approach, especially on the PSU space. If we see private banks that are a bit lethargic today, the move is led by State Bank and other PSU banks, and we expect this outperformance can continue. State Bank remains a preferred pick. It has come into a new territory, and possibly it's headed towards the levels of 1230 to 1250 levels. Along with that, other counters that we are liking from this space is Indian Bank and Union Bank, which we expect to see similar kind of move in the near term.
Sure. Okay, those are the banks that Rajesh likes aside of SBI. But Rajesh, hold that thought, just taking stock of how we've shut shop for the day. 25,862. That's where we've shut shop for the day. Comfortably above 25,850, and it's a triple digit 170 point up move on the Nifty. 25,922, that was the swing high. But let's see, given the kind of start we've had to the week, 26,000 looks like it's just a matter of a couple of more sessions at the most. Talk about the mid-cap end of the market, 1.5% gain on the Nifty mid-cap index. It's a 920 point up move. The small-cap index was even more upbeat, gained in excess of 2.5% today. Breadth of the market, very, very strong, 4:1. And look at the bank Nifty, almost 1% higher, 60,670 almost. That's where the Nifty Bank Index shut shop. But I want to take a look at the Nifty PSU Bank Index. SBI really cheered the bulls today, the entire market, so to say. And PSU Bank Index particularly was all fired up. 3.5% up move coming in on the Nifty PSU Bank Index. Aside of that, even beaten down sectors like real estate managed to participate today. 2.5% gain on the Nifty real estate basket. Metals, given the fact that we saw good rebound coming through on gold and silver, the Nifty metal index was also upbeat, 1.5% gains. In fact, Tata Steel, mind you, post numbers, managed to hit a fresh 52-week high today, 5%. That's the kind of gains it clocked in the intraday session. So yes, metals were also fairly upbeat. Pharma up 1.5%. Autos also, picking up pace, almost 0.8% kind of gain coming in there. But barring IT that clocked in very, very minuscule losses, all the other sectors were fairly upbeat. FMCG will be in focus in particular because we have numbers coming through tomorrow on Britannia, Titan, etc. So some FMCG names will be reporting numbers, which is why FMCG will be in focus tomorrow. Taking a look at some of the individual movers, of course, SBI was the big one, ended with gains of 7.5%. Shriram Finance closed second, 6% up. Grasim reports numbers tomorrow, upbeat ahead of that, 3%. Titan, I think Titan is also reporting numbers tomorrow. And the stock, yes, Titan is reporting numbers tomorrow, and the stock is fairly upbeat. Perhaps some kind of positioning ahead of numbers. Almost 3% uptick on Titan. Dr. Reddy's, up somewhere around 3%. You have Tata Steel, ended higher by 2.5% or so. Hindalco, Eternal, BEL, Trent. Kotak Mahindra Bank, although ICICI and HDFC Bank were out of favor, Kotak Mahindra Bank did well to end the day in the green with gains of somewhere around 2% or so. Some of the other laggards, Power Grid, ITC, ONGC, NTPC, some tech names like Infosys, Wipro, they were out of favor. Axis, ICICI, HDFC, all three ended the day in the red. And you also had some auto names like Maruti Suzuki ending the day not in great mood, so to say. But looking at real estate, Rajesh, I'll just like to come to you. Such a battered space, right? And on days when it manages to see some kind of a spurt, would there be any stocks that you would look at all?
So since last week, we are seeing some positive momentum in this space from the lower levels. In fact, Nifty reality space, if we see, it has rebounded precisely from the 200 weekly moving average, and the kind of short-term charts are occurring. We expect this positive momentum or catch-up move can extend in the near term. The counters that we are liking from this space is Shobha, Lodha, and DLF. So these three counters are showing relative strength, and the kind of formation recently we have. We expect DLF, Lodha, and Shobha to extend this positive momentum in the near term.
Okay, Subha, that's one stock from the real estate pack that you can look at. But let's look at some of the metal names as well. Tata Steel in particular. Stock ended high by 2.5%, hit a fresh 52-week high as well. Numbers were a little mixed, but India business did show a fair bit of resilience, although European operations remain under pressure. Debt has also come down for the company, and brokerages have mostly maintained their faith with a buy call on this stock. How do you approach some of these metal names, especially the ferrous ones, Tata Steel, JSW Steel? Would you look at them at these levels, and how are they looking in terms of risk reward?
Definitely, the bias remains positive, but in the recent times, we have seen a volatility in this space. So a view would be to consider buying on dips. If you see chart structure of Tata Steel, it has been trading in a higher top, higher bottom chart structure, and in the recent times, weekly breakout is also there. So there is a further potential there for this counter, possibly towards 220 to 225. But buying on dip would be suggested. In the past, we have seen dips towards 20 EMA being bought. So any dip towards 193, 195 would be an ideal level. Along with that, the JSW Steel, this counter as well, we are seeing a saucer formation on the charts. And last week as well, there was a bullish gap left. This gap around 1200 coincides with 20 EMA. So 1200 is the immediate support, and as long it holds, we expect the stock can move towards the levels of 1330 to 1350. So positive bias on both the counter, but consider buying it on dips.
Okay, that's the view on metals. Consider buying some of these names on dips. But let's also talk about the jewelry space. Particularly the likes of Kalyan Jewellers, even Titan for that matter. All of these stocks were, dazzling in trade today. For Kalyan Jewellers, the numbers are fairly good. Same store sales growth stood at 27%. Share of studded jewelry improved to over 31% from 29.5% a year ago. And there's some bit of news flow that I want to point out, although it didn't really deter the kind of rally we've seen on the share prices. But Moneycontrol has learned that Kalyan Jewellers has approached the market regulator alleging unfair and manipulative trading practices in its stock, and has sought regulatory intervention, including a temporary suspension of trading in the F&O segment until an inquiry is completed. Now, the jewelry retailer said it had observed unusual trading patterns and the circulation of unverified rumors that, in its view, were aimed at triggering panic among investors and exerting downward pressure on the share price. But the letter was sent sometime in 2025, in early 2025 or so. So it didn't really have any bearing on the kind of rally that we have seen on the share prices. And if you talk about what brokerages are saying, they have maintained their buy rating. They've also taken note of the fact that Q4 demand trends remain strong. So Kalyan Jewellers, after the 15% move that you saw today, what would you do with it? Is it time to take some profits? And for Titan, ahead of numbers tomorrow, what is the positioning like?
So if we see the charts of Kalyan Jewellers, similar price action we witnessed last year during the Feb month. Post the result, there was a strong traction from the levels of around 435 to levels of around 580. Similarly, the start of the Feb, we are seeing strong traction. Possibly this move can extend. The next up move can be towards the levels of around 460. That coincides with a golden ratio and 89 EMA. So as of now, the bounce is likely to extend, but we are not that bullish on the counter because the overall chart structure remains in a lower top, lower bottom structure. So until we see a structural change, we'll consider this short term as a trading opportunity, but at higher levels, one should look to exit position. Titan, on the other hand, overall, the
Hmm.
chart structure remains positive. On the weekly charts, we have already seen a breakout where every dips towards 89 EMA is getting bought into. Last week also there was a bullish higher bottom formation, expecting the stock to move towards the levels of around 4400 to 4500. Tomorrow, its result is going to be there, so maybe some volatility, but overall bias remains
Hmm.
positive with a support around 4000 levels.
Okay, so about around 4,000 levels, but the bias is clearly on the positive on a Titan as well. But tomorrow you can expect some bit of volatility, given the fact that the numbers are coming out. But we've spoken through the day. We've spoken about all these export-oriented names, right? We've got clarity on the India contours of the India-US trade deal. So a lot of these names like KPR Mills, Trident, Arvind, they've all been in focus. Pearl Global. But there's one stock that I want to draw your attention to from this lot, from the entire export-oriented themes, is Goldiam International. Now, despite the US tariff pressure, Goldiam International delivered better than expected third quarter numbers. Revenues grew 18% on a year-on-year basis. Strong festive demand and continued market share gains in the USA. Some of these factors, helped the company clock in good set of numbers. Margins also improved by 200 basis points. Net profit grew somewhere around 37% or so. Now, the company is also increasing focus on newer markets such as Europe, Middle East, Australia, and is also ramping up lab-grown diamond business in India by opening new stores. Goldiam International, I think the stock was up somewhere around 11% today. Any particular levels you'll be watching out for here, and any calls here?
So the level which one needs to watch is around 425 levels. Today also it made a high around those levels, and then it partially came down. In fact, if we see in the past, last year during the March month and during the September month, it made a similar high of 425, and then the rally fizzled out. So it would be important how prices sustain around 425 in the coming session. If 425 is crossed, then there could be a further potential towards 500 levels. So 425 would be crucial. And on the downside, if we see there are two bullish gaps that are left in the last few sessions. So immediately 375 would be the support. As long it holds, uh, keep the longs hold. But if 375 is broken, then exit your long positions.
Okay, 375. That's the crucial level to watch out for on a Goldiam International. Talk about a shipping corp as well. 20% up move today. Last 2 weeks, the stock has rallied 30%, in excess of 30%. How would you look at this particular stock? Numbers were fairly good, and the stock clearly reacting to that.
So now we are seeing that on the weekly charts, the prices are definitely making a higher bottom kind of structure, and possibly the stock is headed towards its last year's October swing high of around 280 levels. Once that is crossed, we can expect move back towards the 330, 350 level. So overall, going with the momentum, we will suggest to continue to hold. There is a range breakout on the charts. The range breakout around 240 would be immediate support, and on the higher side 270 to 280 levels. Once that is crossed, further momentum is expected.
Okay, that's the hold call coming in on an SCI. But let's talk about one more stock, Keynes Tech. CLSA has upgraded the stock to outperform, although they've cut the target price to 4,200. Of course, we did see some pressure on share prices. These names like Keynes, Dixon, they've all corrected a fair bit, but then in recent times, they've seen buying interest returning as well. But for Keynes in particular, FY26 revenue guidance was cut to somewhere around 4,100 crore rupees, and the management last week admitted that guidance was built on expectations that may have been too aggressive, and they've acknowledged their overestimation as well when formulating the guidance, right? So now they've cut the guidance. Keynes Tech today again saw a good bounce on the back of this upgrade. That's volatile stocks at the current juncture. So how would you look at some of these EMS names?
So overall, the chart is definitely placed around its long-term supports. In the past as well, the prices have bounced from the levels of around 3,400 during 2024 and last year as well. The stock bounced from the levels of 3,400. So similar kind of structure, but this time the move has been very sharp and vertical. So as of now, those who have bought recently in the last few sessions, hold on to it. Maybe the stock can move back towards the levels of around 4,400 to 4,500, but that would be levels once again to reassess if the positive momentum holds. If not, then exit your long positions.
Okay, okay, that's the call on Keynes. But just want to draw your attention to an ONGC. The stock, ended the day with a negative bias. But in recent times, in tandem with what the crude prices have been doing, we've seen a very strong rally come through on names like ONGC and Oil India. A good time to buy on dips some of these names.
Yeah, definitely. So we have a positive bias on ONGC and oil, particularly on the ONGC. If we see the weekly charts, the prices were trading in a tight range, and recently the prices have broken out of a tight range. So after the recent up move, prices are cooling a bit around the breakout levels. But if we consider a time horizon of around 6 months to 8 months, possibly the stock has a potential to move towards the levels of 300. So this kind of correction or this kind of consolidation should be considered as a buying opportunity. On the downside, if we see the breakout levels around 260 seems to be the immediate support. And once the momentum resumes, we expect 280 as an immediate target and then 300.
Okay, that's the view on ONGC. Some of these names have been seeing good buying traction in tandem with how crude prices have been moving. Higher crude prices beneficial for upstream companies like ONGC, Oil India, etc. But some auto names, the auto related names rather, JK Tires saw good 2.5% up move. Earnings also came out over the weekend. You have Ashok Leyland, that stock was up 2%. Bharat Forge, obviously, in the wake of the India-US trade deal, the stock has also been in focus. Samvardhana Motherson will be reporting numbers tomorrow. So, among all these names from the auto ancillary basket, anything that you prefer?
So one counter that we are liking is definitely Samvardhan Motherson Sumi. I mean, the overall chart structure has been positive, where prices are moving in a higher top, higher bottom. Now, if we see prices are back above its recent highs, recent swing highs, so possibly expecting the move to extend. Possibly in the near term, the stock can move towards the levels of 140. Similar counter which we are liking is SML Isuzu. It was in a consolidation phase, but today we saw strong traction in that counter, and expect momentum to continue in the near term.
Okay, Samvardhana Motherson and SML Isuzu. These are the two preferred names from the auto ancillary basket. But I want to get in your thoughts on ITC. It saw a very good up move come through last week. I think some of the cigarette makers were also doing fairly okay, especially after the kind of drubbing we've seen since the start of the year. For some of these names, would there be a case to to get into any of these counters uh, from a trading perspective or from a positional perspective, anything?
So if we see Nifty FMCG as a whole, on Friday there was a strong traction, whether it may be ITC, whether it may be HUL, Dabur, Tata Consumer. So overall, as a basket, FMCG space did well last Friday. It ended up with a formation of engulfing on the 200 DMA, and we expect this move to extend. HUL is one of our top picks. Along with that, ITC as well. It ended up with a strong uh, engulfing on the weekly chart. On the daily chart, it has closed about 20 EMA after a long time. So expect this move can expect continue. For ITC, in the immediate terms, prices can move back towards 347 to 350 levels. So any kind of dip can be an opportunity. As of now, we sense somewhere around 310 to 315 seems to be the immediate support for this counter.
Okay, 315, 310 immediate support for the counter of an ITC. But want to get your thoughts on some of these names like Graphite, HEG. Today Graphite was upbeat. I think the numbers came out over the weekend and the stock was reacting to it. But between the two, HEG and Graphite, anything that you prefer, and is it worth taking a bet on, at least from a trading perspective?
On the chart structure, graphite looks much better. I mean, continuously moving in a high top, high bottom structure. And overall, if we consider the weekly chart as well, the stock has come out of a strong consolidation. So overall bias is positive, but recently we have seen very volatile moves in this counter. So ideally, it would be to buy on dips. On the lower side, if we see somewhere around 600, there is a base that is happening. And on the high side, 675, 680 seems to be the immediate resistance, multiple tops around those levels. Once that is crossed, we can expect strong momentum. HEG as well moves almost similarly. It's placed on the 200 DMA. So if anybody wants to add, 520 is a strong support that can be kept as a stop loss. And then in the near term, 595 to 600 would be the immediate targets.
Okay, those are levels to watch out for in HEG and view on graphite as well. We were talking about in FMCG just before this. Just came to my mind that all these food related stocks, the quick service restaurants like Jubilant, Devyani, Westlife, all of these stocks saw very, very good gains last week, and tomorrow we have Jubilant numbers as well coming out. These stocks have seen a prolonged sell off in prices, right? And off late we've seen some bit of traction coming back. Is this just a technical bounce, or do you think that has the potential to extend? What are your thoughts, and how would you look at Jubilant particularly, because the numbers are coming out tomorrow?
Recently it had been underperforming, but last week there was a strong traction, and in fact, we witnessed a morning star pattern on the weekly charts for the Jubilant food, and today we are seeing a follow-up buying. And along with that, prices have also crossed above 50 MA after a long time. So we expect this move to extend. In the near term, the stock can extend towards the levels of 575 to 580 levels. That would be crucial to watch out how prices sustain around 580 levels, because that is a major breakdown level. So as of now, short term, we are expecting a bounce, but around 575, 580 levels, one needs to reassess the price momentum.
Okay, that's the view on some of these quick service restaurant stocks. I will have to leave you on that note, Rajesh. But before I do that, what would be your trades for tomorrow?
So two counters that we are liking. One is Indus Tower. This counter has been one of the top performers, and today we are seeing a strong range breakout after consolidation of last few weeks. So Indus Tower can be bought with a stop loss of 446. In the near term, we expect a strong move towards 476. This was a breakout counter, and one counter that we are looking as a reversal. That counter name is Inox Wind. So Inox Wind, if we see, it's placed on a strong support of 200 weekly moving average, and on the daily chart we are seeing a range breakout. So support as well as breakout. So Inox Wind, we expect strong bounce from the current level. So with a stop loss of 106, Inox Wind can be bought. We expect a near-term targets of around 120.
So Indus Stars and Inox Wind, these are the two recommendations coming in from Rajesh. With that, Rajesh, would like to thank you for taking out time and joining in. Always a pleasure chatting with you. Look forward to more interactions and look forward to more such days. Today was a good day for the market.
Yeah, sure.
All right, that completes our chart checks for this afternoon. But just want to point out numbers to watch out for tomorrow. Quite a few names from the consumption basket. You have Titan, Britannia, these two are coming out. Even Jubilant Food is coming out with numbers. Aisha Motors will be reporting numbers. Sambardhana Motherson, Apollo Hospital, Grasim, Oil India, Escorts, Work Hard, United Brewery. So yes, busy day on the earnings calendar. Watch out for those numbers that I just mentioned. But here's the Moneycontrol exclusive. Rajiv Anand, the MD and CEO of IndusInd Bank, has said that the situation at the bank is much better than what he was anticipating, affirming that the concerns that the top banker had while taking up his new assignment have not played out. He's termed his tenure at the bank so far as an exhilarating experience. Here's an excerpt of the exclusive conversation that my colleague Hamsini Karthik had with him. Listen in.
It's been about 5 months or so in
That's
office. How would you summarize this if I were to ask you in a sentence or so?
I think it's been an accelerating experience. You've come into a bank which has gone through a fair degree of trouble really over the last 6 months, the 6 months before that, and so therefore it was a challenge that was anticipated. I did anticipate that it would be a challenging experience, but I think what I've been able to see, do, and work with the teams over the last 5 months has certainly energized me. I think this is a franchise which is under delivering to its potential, and so therefore to that extent I do believe that this is a bank that I'm very certain that over the next 3 years will be a bank that all of us will be proud of.
That's really nice. That's really nice. You did talk about how you had some concerns while accepting this assignment. What in your mind you thought would be the biggest concern as a CEO of IndusInd Bank should you be stepping into, and has that concern played out yet, or where do you see that concern really? How do you see that concern shaping up?
When I was evaluating the opportunity, I mean broadly, I knew that there were two very good businesses, three very good businesses, which are very different, which is the commercial vehicle business, the gems and jewelries business, and the microfinance business. So therefore, one knew that there was a differentiated business strategy in place, and one really knew that was certainly something that we could build on as we go forward. You also knew that the franchise is strong, and finally you knew that the position from a capital perspective is more than adequate. If you look at it at a CET1 level at 15.8% and a little over 17% on a CRAR perspective, was things that you could see from the outside. What you obviously worried about was these were the problems that have been disclosed by the board through March and June. Is there more to come?
Sure.
Is this the iceberg, or is this the tip of the iceberg? Second is one really doesn't know how exactly the book is playing out, and because there's only so much of disclosures that one gets from the outside.
Sure.
I think these were the two unknowns that one looked at before taking on this assignment. But I think I must say that as far as the issues which have been well reported and articulated, all that is now behind us. The book is notwithstanding slippages in the normal course of business, the books are sort of relatively clean. So therefore, in that sense, actually the fears that one thought would be much bigger than what had anticipated have actually not played out.
Well, that was an excerpt from the exclusive conversation with the IndusInd Bank CEO Rajiv Anand. Of course, you can catch the full interaction on our YouTube channel. So don't forget to tune in. In fact, log on to our YouTube channel and watch out the full interview over there. But of course, with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. But of course, we'll be back with the markets tomorrow morning at 8:30 a.m. So don't forget to tune in for that. Till then, have a great evening, rest it out, and come back and join us tomorrow morning. Thank you.